Welcome back. Today I'm going to talk about a very interesting mythical creature called residential real estate. Places like flats and apartments where you and I stay. And there are two key questions I am trying to answer. One, what drives the demand in residential real estate? And two, what is the likely outlook over the next 5 years? Now, in terms of demand and answering question one, the historical notion has been that this sector is driven by consumer confidence and GDP growth. So when the country is growing well, when consumer confidence is high, people have a lot of money, that is when they go and invest in residential real estate. But nothing could be further away from the truth, as I will talk about in this session a little later on. But before we move on, it is important to understand why is residential real estate, flats and apartments where you and I stay, so important. Now, a survey done in April, the month of April, bang in the middle of the lockdown by housing.com indicated that residential real estate is actually the single most preferred investment vehicle, and this was ahead of gold, and gold is going through its greatest bull run right now. So in terms of preferred vehicles for investments or purchase, residential real estate is by default the number one vehicle. Now, before we go into detail into answering these two questions, please do subscribe to the channel and we'll get started. Now, to truly understand what drives residential real estate, it's important to look at history to get a perspective. I'm going to divide the last 10 years into two phases, 2008 to 2014 and 2015 to 2019. Now, during 2008 to 2014, residential real estate prices went up by an average of 10%. And this is after factoring in the impact of inflation. So they went up by an average of 10%, while the economy was slowing down from an average of 8.5% before this period to about 6.5%, and consumer confidence actually started tanking by about 5-6% steadily. So the economy is slowing down, people don't have that much money, consumer confidence is tanking, but residential real estate is shooting up. Now, this is not conventional wisdom, and if we have to explain this behavior, we have to look at it from the nuance of behavioral psychology and societal behavior. Now, if you look at what happened during these 6 years, the first 3 years of which were bang in the middle of the financial crisis, there was a lot of stress with respect to jobs for a lot of salaried employees. There were a few corruption scandals in the PSU banks, so the faith in the financial systems were not that strong. There were also a lot of earnings figures of companies that took a hit. Now, in this kind of an environment where the mood is fairly gloomy, society generally tends to value systems and value philosophies which are seen more conservative, which are seen more safe, which are seen as less innovative. So in a way, if people have to evaluate if you have arrived in life or not, you often seen as a method of do you have real estate or residential real estate in times which are seen as dark and gloomy. Now, if you look at the period between 2015 to 2019, residential real estate prices actually flattened. They were largely growing by about 1 to 2% over these 4 years, while consumer confidence actually made a stunning comeback. From a negative 5 to 6% over the previous period, they started growing at by about 3% every year, while the GDP sort of remained the same if you remove the effect of GST and demonetization. So in this phase, the country is largely growing at the same rate. Consumers have way more confidence about their future, but the residential real estate prices have completely flattened from an earlier boom period. Now, this goes against the historical understanding of this sector, that when people have more money, when the economy is doing well, they tend to buy more houses then. And even to explain this phase, you have to actually look at societal behavior and behavioral psychology. Now, during these 4 years, these 4 years actually coincided with the rise of the gig economy, the millennial workforce, contributed by the rise of 4G and internet speeds, and the entire philosophy or understanding of societal behavior moved towards you could rent everything. You could rent the car you go in, you could rent your clothes, you could rent your gadgets, you could also rent the house you stay in. Now, the value systems of society at this point moved towards more risk-taking, moved towards innovation, moved away from conservative values. And if you had to prove that you've arrived in life during this stage, you actually didn't need to buy a house. Now, to be fair, from a supply side perspective, GST, demonetization, RERA might have played their part, but it's essentially societal behavior that's actually driving the residential real estate. So let me try and answer the second question in terms of what is likely to happen over the next 5 years. Now let's take a look from consumer behavior, behavioral psychology and societal norms. There is a certain amount of pressure in jobs. There are enough stories about how people are losing jobs. Secondly, if you look at the financial markets, there is a lot of concern over the NPAs. No one really knows how bad the situation is. The moratorium is getting lifted. How much the defaults are likely to be. The stock markets are at unbelievable highs and the corporate earnings are not likely to sustain those numbers. So crashes potentially around the corner. Now, in a gloomy atmosphere like this, societal values are likely to move towards conservatism, move away from risk-taking, move towards having a safe asset. And in these times, more and more people are likely to invest towards residential real estate. So if I have to stick my neck out and put a number, in my view, the next 5 years in residential real estate are likely to be one of the biggest boom phases this industry has seen. And I think housing prices might actually be growing at 10 to 12% every year. Now, if you look at the method of selling, it's going to be slightly different from the 2008 to 14 phase. Firstly, in my view, the tier 1 cities, both luxury and affordable houses in tier 1 cities are likely to grow slightly faster than what the metros are likely to grow. Secondly, digital is going to play a much bigger line of action in terms of the pre-purchase process, discovery and pre-purchase, while the actual buying process is going to happen over in person. The third thing that is likely to happen is there are certain supply side considerations where people expect builders to be fair with delivery, fair with financing, fair with the prices also. So in summary, if you have been looking to buy a house, this might be the best time to actually buy one. Even if you're not looking to buy a house, society might just force you to buy one over the next 5 years. So this is what my take was on the future of the residential real estate. Do let me know what you thought of this video. Drop your comments below and look forward to meeting you again.